Hi YouTube, this is another powerful video. If this is your first time of coming across my video, I will advise you watch this to the end. And for my sincere followers, this is another powerful videos that I've made just for you guys. So this video is actually a lesson from my mentorship class. You know, I have a mentorship class now where I obviously train people and at the same time review certain secrets about trading. Okay, there are things that I review. So this particular class was held on Saturday. Today I'm making this video on Monday 22nd, I guess. Today's 22nd, I guess. Monday. So I made this video. The lesson was, we had the lesson on, is today 22nd or 23rd? I don't know for sure, but I don't know for real. But I know I made a video on Saturday. We had a class on Saturday. So, and I reviewed how to actually trade USD pairs and the best way to trade anything USD pairs. And I can guarantee that if you follow this method, okay, you are going to make a lot of money and you are definitely going to win most of your trade, most especially if you are trading USD pairs. So the video you will watch now is the live session of that class. So after this introduction, the video will start. You see how I explain all these things in detail. So I just say I should give this to my favorite and lovely followers and subscribers on YouTube, and a way of me to is a way of me saying thank you for your love and support and for appreciating my effort. So I just say I should give you guys this particular lesson so that you can actually take advantage of the knowledge and then make money while you are trading USD pairs, regardless any USD pairs that you are trading. In fact, as I'm talking to you right now, I'm selling Euro USD. I'm also selling AUD USD, and I also wish to sell GBP USD, but it's not giving me a good entry. Even AUD USD, I really don't like how it's doing right now. But anyways, I'm selling them right now based on what I'm about to show you in this video. So I will take you to the screen now, to the video, so you watch. But before then, if you want to be part of this kind of class, you know, this is a lesson from my mentorship class, and enjoy knowledge like this or possess knowledge like this and become a master yourself, check my bio. You will see my Telegram link, my IG link, so you can send me a DM and then enroll for the mentorship class. And then you will just stop watching all these YouTube videos and all that and become a profitable trader yourself. Become a profitable trader yourself. Yeah. So and then please, if this is your first time of coming across my video, like and subscribe. You won't regret it because you are going to learn a lot from the channel. And if you just don't feel like subscribing, it is okay. Just try as much as possible to like the video, as at least as a sign of appreciation. But it will be ideal for you to like the video. All right. So let me take you to the screen and show you the video, and so just enjoy. Yeah. Good evening, everyone. Uh, I believe you can all hear me.
Yeah, we can hear you.
Good evening.
Can hear you, sir.
Okay.
Good
Okay.
evening.
Good evening, sir. Good evening. Okay. So I actually want to talk about certain things. One of those things is how I trade. First of all, majorly how I trade USD pairs. And I also want to, if you are a crypto trader and you are on this particular live class, we also want you to pay attention to this very class, my bias, and why fundamentally and technically on crypto. I will be showing you, I will be discussing that too. But basically, those are just the two major things. First of all, my bias on crypto, and my my bias on USD pair, currency pair, currency. But basically, I don't, my focus is mainly on GBP and Euro USD. Sometimes I add AUD USD to it, actually. But my view on that is what we'll be talking about today. Actually, a lot of things happened this week. Today, Saturday, yes, we are still in the week. So a lot of things happened. The FOMC news, interest rates, and everything. I was also affected somehow. I was also affected. I lose some money because of my over sabi nature. You know, I was hoping that when Fed cut interest rates, it's going to be of favor to me based on my analysis and everything. But voila, it went against me, and the markets actually hit some of my stop loss. And anyways, first of all, what I want you guys to, there's something I want to say regarding that. As a rule for me, I've actually said it in our classes many times, that when there is going to be high impact news, I always wait for the news to come out. Then I check the data. Then when the data comes out, I use the data to validate what is going to happen in the stock market and what is going to happen to the currency. Okay, but that wasn't the case on last week. I didn't wait for the data to come out or anything. I just jump into it and then take the trade. So what I just want to tell you is, whenever you have rules that you've set aside as a trader, you want to always stick to it. You want to always stick to it. It's just that there is one spirit that has to do with, there is one spirit in forex or in trading generally, that sometimes you just break your rules. You just break your rules, and when you break those rules, sometimes it costs. It's going to cost you. So basically, that is just one thing I want you to know, is that you must try to learn. Although the situation is not always like that for me, but this week wasn't the case. I actually follow into that situation. So basically, what I want to tell you is that have a rule. Maybe you are going to like a place, just write, either it's Microsoft, or just write your trading rules or something like that. If you want to print it out. Your office or your study room or wherever you are placing trade, if you are the type of person if you are a full-time trader like myself, or you are always trading at home, you want to place it there, and so that every morning before you take trade or before you analyze trade, you want to scan through those things and let it refresh your memory, your state of being there, so that you don't go against them. All right. So that being said, so one thing is this: when I want to trade, let's say I want to trade Euro USD, I don't do this all the time. It is only when the market is a little bit not clear for me. Like now, US economy, I don't really know what is going to happen. Like, I can't significantly say this is what is going to happen to this currency or something like that. So when it's not clear for me, I use what we call dollar index. Dollar index is not the only index that we have. First of all, let me tell you what that dollar index means. Dollar index, this is a basket of currency. Okay, different currency. They now compare them against just US dollar. Okay, so US dollar against every major currencies that we have. Okay, it's basket of currency. So that is what we mean by dollar index. Just like we have S&P is an indices, is an index. NASDAQ is an index. So what they mean is this basket of different crypto. I think S&P 500 now, we have about 500, and that is where they derive their name from. About 500 stocks there. So the performance of those stocks determines the direction of the indices. Okay, the same thing applicable to NASDAQ, the same thing applicable to US 30. So dollar index in its own case is basket of currencies, different currencies, but they weigh them against dollar. So if, for example, if you see this is dollar index DXY, that is the symbol. If, for example, in this case now, okay, during this period that we have here, let me mark it. During this period that we have here, that the market was trending down, okay, that I say market, that this DXY is trending down. What it means is that against every major currency that we have out there, dollar is very, like, they are stronger than dollar. Dollar is weak against every other currency. Like, it means that dollar is weaker than euro USD, dollar is weaker than GBP USD, GBP rather is weaker than euro, is weaker than Australian dollar, and name it, major of those Japanese yen too. That is why you have DXY trending down. If you see where DXY is going up, for example here, during this period from here to this place, it means that dollar is stronger than majority, or let me say most of this currency, most of them, those major currency is stronger than them. And when you are able to identify this, you can easily, if you analyze your index, take for example, here is a psychological zone that I marked. And when the price got here, okay, it formed a double bottom. So for me, as a technical analyst, sometimes, I will consider the fact that, okay, since market formed a double bottom here, and you know my setup, RSI and everything, I will be expecting that, okay, this market, this index is going to go up, okay, from here. That is going to be my assumption. So if I already have this assumption that index is going to go up from here, it has been coming down for a long time, and then it has hit a particular psychological level. Even if it's going to continue to go down, at least there should be a push to the upside down, or to the upside. This is an impulsive move. At least there should be a form of retracement. So definitely, this market hitting this psychological level, and as a matter of fact, hitting this psychological level, there are going to be policies, there are going to be things that US economy, US government is going to consider to make sure that, okay, this market has reduced significantly. I think we have to, at this particular psychological zone, this particular zone, let's probably put some measures or something like that. So many factors that could warrant the market being pushed from here. So I, as a person, will be considering the fact that DXY is going to go up here, which means that dollar is going to gain strength against all this other currency. So as a result, I will be looking for an opportunity to sell either euro, GBP or AUD against US dollar. So if you look at the time that this action takes place, it is around 27th of August last month. That was when this particular double bottom formed. If you come to euro USD, for example, and you check around that period, 27th of August, look at what euro USD was doing around that period. Euro USD formed a head and shoulder pattern, which signifies a sell opportunity at that particular time. As you can see around here, this is 26. This is the second shoulder. That was at the second shoulder. We had that what's it called? We had that second shoulder. That is when we had the second double. That is when we have the second bottom for the DXY. So as a result here, I may consider selling this kind of trade, okay? But that is not even the case right now. The reason, this is just a reference, but now, as the case may be, right now in the market, okay, I want to check what DXY is doing based on all the hula baloo that happens this week, based on the data that comes out in US and all those kind of things. So I want to, because of that, I had to open DXY and do my analysis. I think I did it on Friday. I checked DXY to see what's actually going on with DXY, because I want to know the state. I want to know what is happening. So and I want to know where the value that dollar, that what DXY is doing. So I had to like come to DXY. That was why I put it on the chart, because I also want to show you. Okay, so when I got to DXY, first of all, let's come to daily time frame so that we can see things clearly. You will discover that over the time, this particular psychological zone price has been turning from there, because US economy they are preventing, okay? Don't forget that it's not just a line, it's a zone, okay? So they've been trying many times to make sure that dollar doesn't go beyond this particular level, okay? Because perhaps that is going to weaken the dollar so much. So it has come there many times. It pushed up here, pushed up a little bit below it, but still that same area, got up again, come back here, got up. Now the market is there, the index is there. So, and I want to believe that, I don't know the data that come out next week, but now that the market is here, I, as a person, at least on daily time frame, if I thought the market is going to break below, okay, I still expect a little bit push to the upside, okay, before this happens. If at all anything, if at all the market is going to break below, okay, at least there should be a little push, because one way or the other, what they are doing right now in the US government, what they are doing right now is to defend their economy, is to make sure the economy, because when you reduce interest rate, definitely, basically, you are giving jobs the opportunity to be able to get loans at a cheaper rate. Hence, this can actually boost their economy, reduce their inflation or recession, that the fear of recession that they are having, all these things. So, and that could actually give more value to their currency as a result. So, I still believe one way or the other that the market is likely to push. And technically too, what I'm saying on daily time frame is double bottom. Okay, double bottom with my RSI showing me divergence to the upside, momentum to the upside. So if I come to 4 hour, that double top is okay. When it happens, this is the double top here, but now on a 4 hour time frame, there is a push here, and it also forms some level of consolidation. This consolidation and this consolidation that happened here, all this push to the downside, back to the up, this is what happened on Friday. Okay, this Thursday, Friday. Okay, Thursday. I think FOMC was on Thursday. Yes, on Thursday. Yeah, all this push, all this drama that happened here was all the play around that happens on Friday. So you will discover that the market, despite all that, the market maintained this position, this psychological zone. So basically, what I'm looking out is that this place might well be defended. So price may want to push to the upside, at least to this particular level. And if that is going to happen, if this DXY is going to go to this point, I expect every other currency like Euro USD to drop from there. And if you look at other currencies, Euro USD, JB USD, and the rest, okay, I put here because I'm expecting next week to short this market actually. So I already see divergence here. For example, I already see my divergence here. Ordinarily, I will just wait for price action pattern, like for the market to retrace, come back, then start this downward movement. But if I will tell you the truth, I may not wait for this retracement. If market plays around here, all I will just do is place my trade here. So if it comes, I will try to hold this. Whatever that happens, I will try to sell this market, because the DXY might just start going down from there. Okay, so anything can happen, but I don't know when I will enter, but I may just enter straight away without waiting for the price action pattern. If you look at AUD USD as well, it is at a psychological zone as well, a kind of resistance zone. Okay, and okay, even if the pattern is not clear, there has been a lot of choppiness here. So the reason I put this, okay, let me just say this: the reason I usually use trend line in this case is because when I see something like this, if I see a push like this, and I don't see any form of divergence to confirm any entry, I don't see any double top or any this thing, then I use trend line like this, so that I will know that, okay, if anything happens, I will still want to be trading in between here, but as soon as this break, I want to trade. And if it happens that the market just break here, I may take an entry, but I will have to manage a bigger stop loss. But another thing that can happen is that if I see the stop loss is too big, anyways, this is AUD USD, the pip value is very small. So I don't think, I think I can actually manage this kind of stop loss, even 64 pips, so it's not really a big deal. So basically, that's just one thing. Okay, so if you check GBP USD too, is not clear yet, but GBP USD is not clear. So this one, if at all I will enter GBP USD, I want to see this one show me that pattern. Okay, I want to see this one show me that pattern. If this one should break directly, I won't be taking this trade. The reason is because when I check, if you check your analysis from higher time frame, okay, you will discover that GBP USD doesn't really. Let me go to weekly. If I will see any significant past data that supports where it is right now. 1, 2, 3, 4. Okay, anyways, I have past data that supports this place to be a critical zone. This is a resistance touched, another resistance. The market break a little bit here, come back to retest it, then breaks. So I think this point is valid, but I won't just take my trade on GBP USD like that. So in the case of GBP USD, I want to see price action pattern. And the reason GBP USD has not even shown any sign of reversal is because last week too, they also tried to, I think they decided not to change their interest rate, because they also try to they try to announce detailed information about their interest rate too, and I think the decision they took actually affect their currency positively as well. So because of that, I think their currency is kind of competing with USD somehow. I think it's somehow strong as well right now. Until I see reversal pattern, JP USD is out of the point. But AUD USD, Euro USD, maybe USD JPY if you want to trade USD JPY. But in that case, you should be looking to buy USD against Japanese yen. Okay. Let me even see what is happening there actually. Okay. Here is reverse head and shoulder pattern here. Okay. What I would just advise you to wait for is a little bit kind of retracement. So that you can have a better entry, maybe something to this point, then you buy something like this. But if the market or your DXY doesn't agree with that, maybe a breakout from here, you may want to consider a breakout. But I don't trade breakout. So if I want to trade this pair now, if I don't see a retracement, I won't buy. The reason is because Monday market is always I won't advise you to, like, Monday market, like I used to tell you, is always rough. So I want to see these guys take their decision on Monday. So latest by evening, let's say maybe 7, 8, then I may consider whatever happens in the market. That's when I will consider buying. So if you are to wait till evening, this may retrace and this might just leave you and start going. So anything can happen. So it depends on how you want to see it. But me, I will wait for a retracement. If I don't see, let the market continue going in this case. But I'm not trading USD pair. These are just a few pairs I can trade. AUD USD, I don't usually trade it, but these are the main pairs that I focus on. So basically, that is what I want to show you. If you have questions, if there's anything you don't understand, please ask now before I move to BTC and crypto. And as soon as I get away from crypto, we are ending the class. So any question regarding what I've just explained, so that we can move forward?
What you explained, I think, is quite clear. If you don't mind, can we check USDCHF?
USDCHF.
USDC, yeah.
Okay. So I will also like to give you my own take on this Euro USDCHF. Okay, let me see. I want to believe that all these currencies are any USD pair, they are gearing up for a bullish market. So let's just see what will happen on Monday. So let me see. I want to higher time frame. I'm coming. Let me, so that I can see things clearly on higher time frame. Like daily, I don't need to go that far. PJ, don't worry, just give me some minutes. So
all right.
So what I can see here, let me just first of all mark this, all this critical area first, like here. It's been a long time I trade all this pair, but good. Okay, let's just consider things from daily time frame. Okay, so on daily time frame, I'm seeing markets consolidate here, and all this drama now that is taking place here is in relation to the reaction of USD. So for a better entry, you may want to wait for a little bit form of retracement. But if you don't want to wait for retracement, this is a resistance zone. Maybe you want to consider. Sorry.
Hotspot wo èmi tí mo ní data mi mò ń lò yìí o. Data mi mò ń lò hotspot.
So it's either you wait for a retracement and then try to buy up based on explanation. And if that doesn't happen and it breaks out when we are supposed to the normal time, then you may want to take a buy position. Place your stop loss here. If the market comes in back inside here and hit your stop loss, wait for the market to react again. Either if it is coming down, wait for it to get here before you take any buy position, and pay attention to what DXY is doing in this case. So basically, I think everything is showing some kind of buy opportunity for USD, and where it is acting as the base currency, but where it is acting as the quote currency, I'm seeing selling opportunity. But let's see what will happen next week. But I critically believe that USD likely to get some strength next week, So before I call PJ, Mr. Linus, is there any other question? Do you understand? Is there anything you want to emphasize on, or you want me to emphasize on rather?
No, it's okay.
Okay. PJ, any question?
Thank you.
Yes, sir. Thank you. For my observation, it seems like you said DXY, dollar index.
Yes.
Is one of the determinant to know what's it called, how other peers react. Maybe like if DXY is buying, then the other peers can now be selling. Is that what you are trying to say? Because I've missed a lot of classes and I don't know. So I really don't understand much. And even on the fundamental, I'll go and watch some of the training that you've taught on that. So
this is it. DXY is like different currency put together. It's not only on DXY. We have it's not only DXY. We have Japanese index. Japan, they have their own index too. That is yen against all other currency too. We also have for almost all of them. All of them have their own index. So what this index do is that now in the case of DXY now, they put other currencies and US dollar in one place. Okay. Now they are now using dollar to compare other currencies. So what you see is that whenever that DXY is going down, they are trying to tell you that dollar is weak against all these other currencies. But when dollar is going up, when that DXY is going up, they are basically, because they are using dollar to compare the other currencies. That is what they are doing. So when that DXY is going up, it means dollar is gaining strength against every other currencies in that zone. In fact, I can back text and show you all these things back to. Let me just, I've actually the August of 27, but if you go back in time, even if we can continue to compare. Okay, we can continue to compare all these currencies. Let me show you. Okay, even from here now that the market drop here, this market drop here, you will see what is going on. Let me just pick one currency. Let's say Euro USD. Let me check the date first. Sorry, but I know it started from here. Okay, it didn't even respect. You see double top. We kind of see some kind of double bottom, but it doesn't respect. This is August 15th of August. All this bullish, all this move to the upside started around 15th of August. Let's just say 15, 16, 17. That is when you have all this. So if you check your DXY, you will see from here 15, 16, and started dropping. As it's dropping down, dollar becomes weak, and every other pair against it continue to gain strength. Okay, so even if you just
what
go
other
back,
pairs that is gaining strength? Sorry,
you say
what other pairs? You mentioned other pairs and every other pairs. If it is coming, maybe like if this DXY is coming down, it shows that dollar is weak.
Yes.
And if it is buying up, it shows that dollar is strong.
Yes.
And you now said that every other if it is coming down, which is selling, that shows that every other strength is other pairs is like GBP USD, pounds, dollar, and Euro USD. That shows that maybe they are gaining strength, right?
Yes. Yes, exactly.
So if the DXY is selling, then Euro USD, GBP USD will be buying.
Yeah, exactly.
Is that not what you're trying?
Yes, that's my
Okay.
point.
And if this DXY is buying up, that
Yes.
shows that dollar is strong.
Yes.
Then every other ones like Euro USD, GBP USD, they are selling because they are weak, right?
Yes,
All
because
right.
they are weak, exactly.
Yeah.
That
Yes, sir.
explains it. Yes, that explains it.
So it's like a correlations of pair now.
Yes, it's like
For
correlation
instance,
of
I want
pairs,
to
exactly.
know.
That best
I want
explains
to
it.
know the performance of Euro USD to confirm the direction, apart from technical analysis. So I can now go to DXY to look at what is happening, right?
Exactly. Thank you. Exactly. You get the point. So
All right.
yeah.
All right.
So what I'm showing you guys this night is whenever you want to take any USD pair at all, you can come around and check this DXY and see what the DXY is doing. Is it at its critical zone? Is it giving you some kind of reversal pattern? And when you open that pair that you want to trade, what is happening there? Is it also giving you some kind of, is it also at the critical zone? Is it also giving you some kind of reversal pattern that is in correlation to what is going on DXY? You get what I'm trying to say there. So you want to, that is when you want to take advantage.
So we can trade it except news trading moment.
Yes, news. I always tell you guys, whenever there is going to be news, you don't want to do any of these things. You just want to wait and see how that news is going to affect the market. So imagine now when news came last week, this is what happened to the DXY. It's after that
What
FOMC,
if we place
this
a
red
trade
candle
this
that
week?
dropped
Sorry,
down.
sir.
You see?
Yes, sir. What if we place a trade this week? For instance, you know you are
this week rather.
You are a swing trader. You're a swing trader.
Yes.
You trade for more than a week.
Yes.
So in that week, what if the moment you place your trade and over in the course of 1 week, maybe over the next week, and you are your trade is still running? What if there was what was it called, a news that occur at that time? Would you now say because you've been swing like you are trading, you still have a current trade, a running trade?
Yes.
Would you have to opt out or what?
Okay. I like that. I like that question. Yeah, I like that question. So now this is what I do. If I check the trade that I'm in and I realize that I have made enough, let's say a trade where, because my trade, it could be 1:5:10, it's sometimes like that. So now if I realize that, oh, I've already gotten 1:2, 1:3 or something like that, or I'm already in decent profit, I can close and ignore it and just avoid the news. But if I am yet to, and in some cases, when I look at the data and I realize that it's not going to, because when this news, high impact news that we are talking about, when they happen most times, they just come and go like all these even if it is CPI, NFP, when they come, they just move immediately and then they drop. So on higher time frame like daily, like 4 hour, they don't really go that far. Let's say, for example, now I saw this market from here. Don't let me use this as an app. Let me use this as an example. Let's say I decided to buy market from this particular zone. Let's just say from here. Let me use this. I bought this market from here, okay? And then the market is already here, and then there is news, okay? If you are trading on 4 hour, it won't drop the way all those long drop that you see on 15 minutes, 5 minutes that you do on lower time frame. It doesn't happen like that. The market might drop like this and then go back again and continue after a few minutes, after it's become stabilized, and then continue its direction. Okay, so all those news doesn't last too long on higher time frame. The only reason why that is why sometimes on higher time frame, even if there is going to be news and I know that I'm already big in the market, I may not even close at times. Sometimes I don't close, sometimes I just hold the trade and then see what's going to happen. Okay, so it depends on how I feel But most times I exit if I see that, okay, wow, this is a good money, so let me just take it and then leave the market. But in some cases, if I see that the money is not significant, I haven't gained enough profit, I just leave it and let the market run do its thing. It may retrace back, even give me some drawdown, but along the line it's going to leave some weak and then continue in my direction if my initial what's it called,